All right. Well, good evening and welcome to the trading review. So, the trading review, I know many of you, you guys maybe have already attended, right? The past ones, but for those of you who are watching this on our YouTube channel and for those who are new to the trading review, this is a weekly event that we host, and it's designed for us to bring the community together to review trades that worked really well and trades that did not work really well. And the purpose of it is to consistently push the importance of constantly learning, right, and constantly enforcing, you know, personal rules and discipline and trading strategies so that we can all become better traders. And by being better traders, we can be profitable. We can consistently rely on developing a source of income from the stock market. And that's the name of the game here, right? So that's part of that's actually the main reason why we started this. And it is a free event for everybody, regardless if you're a subscriber, a student, or just someone who is just in the community for free. So, with that being said, let's hop right in. So, we are 2 days before Christmas, and the volume tends to be a little bit lower, right? Once you roll into the holidays. And today's action was a little bit choppy. There was not necessarily a clear direction in the market, especially with a lot of stocks that we were following. Um, but there still, nonetheless, were really good opportunities, right? You could see here one of the first things that I always look at, just to get a gauge and a sense of how the market performed was, just looking at the Nasdaq and the S&P 500. The triple Qs and the SPY are the two major indices that are the most traded, right? That represent the Nasdaq and the S&P 500 respectively. You can see that towards the end of the day, right here, the S&P 500 actually broke the moving averages and broke that 100-day moving average on a 5-minute time frame, and it just crashed, right? Obviously, that crash is not heavy enough to cause significant damage in the market, but it was trending up nicely, and then it sold off. So I actually took a short position on the S&P 500 right about here. I took what was it, 365 puts, if I'm not mistaken. Let me just double check that. Yep, 365 puts on the SPY, and within probably less than 5 minutes, I was able to clock in. I think it was a 6 or 7% return with some good size on the puts. Had I held it, I mean, that thing would have paid me a little bit more because it closed right about here, almost at break even on the day. Now, when I saw that action, I didn't really know what the news was, to be honest. I just saw the opportunity to be able to get into that short because it broke. Not only was it trending downwards, but you could see that at that time of the day, 368.74 was a level that I saw that it broke, and it also traded right below the purple line, which right here, which is my 100-day moving average, and it was a straight down. So these are the type of moves that I love trading because within that 5 to 10 minute time frame, you can make some serious money. I prefer to trade these types of moves versus this, these very slow trends to the upside. To me, these bore the hell out of me. You've got to stay very patient with it. You've got to, just kind of monitor and make sure that it's staying within the channel, for you to make some gains there. So everyone's got different styles of trading. I'm a momentum trader personally. So for me, I love to take trades when it breaks significant levels, whether it's to the downside or to the upside, right? And I'm picking on the S&P 500 because that was the last trade that I took on the day, which delivered nice profits, right? So for me, when it comes to trading, I would actually prefer not to even trade the whole day and wait for an opportunity like this. Because this type of opportunity, and I'm highlighting my screen again, is exactly what I look for. Because that's where you can make some serious cash, close out your system, and get out, right? So does anybody, and please, you can unmute yourselves and jump in and ask any questions, make any comments, because this is supposed to be, an engaging platform and time for us. So does anybody have any questions about what I just kind of covered right there? Sure, what's up? Mm-hmm. Yeah. Yeah. No, it's a good question. So, yeah, the question is essentially, how do I identify when to get into the short, right? On a setup like this. So, when you're following, there's a couple different ways on how to play short opportunities. One of the key ways is when that AMA crosses below the 20 right here, that's a nice indication that there will be continued downside, right? And then you can put your stops at the 20, right? So you could have shorted the S&P 500 up here. If you miss that opportunity, then you're gonna have to find key levels, right? So right there, I see a level 369. You can see that here at 1425 and 1430, it kind of created a small double bottom, bounced off a little bit. So now, since there was some support there and the market bounced off that level, I mark it right here so that if it breaks it again, you can go in for a short. And right here, you can see at 1450 or 250, it broke it. So you could have gotten in for a short there, made a little bit of profits there, right? Then, but you've got another support area right here where it bounced off. So you can mark the chart right there. Here, it bounced a little bit, got some overhead resistance, especially on the 13 MA, which is my yellow line, sold off again, and then look, crossed below that line that you marked up, 368.86. Boom, you could have shorted it right here. The profits wouldn't have been significant because it held itself pretty much. But then look at what occurred. From 325 to about 345, it held this level, 368.75, right? It actually tested it 1, 2, 3, 4 times, right? On that fourth time, it bounced. It had a nice green candle. You can see here, bounced. But then look at that blue line, the 20 MA. It got rejected off the 20 MA and immediately whoop, came down. And then look at what's occurring. You have the 8 MA, the 13, and the 20 all trending downward, and they're about to cross that purple line. And the purple line is a 100-day moving average. So when I saw that the S&P 500 broke below not only this line right here, 368.75, but it also broke below the 100-day moving average, and the other three averages were coming straight down with it. I started my short position right here. I ended up getting it probably right there, right? Because I saw it break, there was confirmation. Look at the RSI below. The RSI dipped with the market, so it got into oversold territory. But also look right here, the volume. That to me, when I saw that volume spike of more than 2 million shares just dropping like a rock, I knew that this thing was coming down further. So I took a short position right here. I believe I ended up covering my position right about there, right when it broke below the 200-day, the green line. I could have held it for longer. I could have I mean, the market ended up closing down here. So, I mean, there was that missed opportunity. I could have probably, I clocked in a 7% gain. I could have clocked in probably like a 14 or 15% gain. But at that moment, I was happy with the profits that I made and I cashed out, right? So, did that answer your question? Was that helpful? Yeah, man, of course. No, great question. So, definitely identifying the entry point is always a hard task to do, right? Um, but once you've studied these charts long enough, and once you see these patterns long enough, you kind of know exactly when to get into it. When you see some bottoming action here or some support action, like the one that you saw right there at 368.75, when you see an immediate yank like this engulfing red candle, I mean, you know that that's a hard break, super hard break. So there's going to be, most likely, even if you didn't get it at the perfect entry, even if you got it, let's say like at the middle of it or like right below where the entry was, more likely than not, there's going to be continuation. Because for this hard yank to occur, especially with a volume spike, for it to recover, I mean, that'd be, it's not, um, it's not something that I haven't seen before, but the chances are pretty high for it to have continuation to the downside because strong engulfing red candles like these typically have another two legs before it consolidates. You see? So, yeah, man. Does anybody else have any questions about that example I gave? So that's a short example, right? On what I did with the S&P 500. We can go over some other stocks that we traded today. A good one that we traded was, let me see, FCEL was a good one that we traded. Yeah, so we can go through FCEL. I know there are some other ones. Oh, I like Moderna. I didn't. I know we. I don't think many of us traded Moderna today, and it wasn't on my watch list today. But this is a stock that I really want us to study. So let's just zoom in on a specific time frame here that I want us to look at. So there's a really, really nice strategy that Taj and I play from a day trade perspective, which is it's like the reversal play. Oh, Tesla. Tesla did that today. So let's actually touch on Tesla, and then I can also use that same example or that same strategy with uh, with Moderna. So let me just zoom in here so it's a little bit more clear. And I don't use, as you guys can see, I don't use Thinkorswim. I use a different platform, Merrill Edge. So with Tesla and Moderna, you guys can see the charts almost look very similar. And that's because in the morning, in the opening, like 10-15 minutes, both stocks sold off, right? Let's look at Tesla for a minute. So here you've got 9:30, the bell rings, ding ding ding. The stock sells off. If you guys recall, I actually shorted Tesla this morning. I shorted Tesla. I covered it literally probably around here. And then it then reversed, right? And this is something that I really want us to focus on because these types of reversal plays can make you a lot of money. Okay? So you have a stock selling off like Tesla. Look at the RSI. Let me delete that. Look at the RSI down here. It fell below 30. And as you guys know, an RSI that's below 30 is in oversold condition. At some point, there needs to be some consolidation, maybe a little bit of rebound, and then the continuation sells off if there is true follow through with the weakness in the stock. But take a look at this candlestick at 9:45. You guys Can anybody volunteer and tell me what kind of candlestick that is? No? So this candlestick is a strong reversal. Oh, I think I got a DM. Let's see. Bottoming tail. Yes, sir. It's definitely a bottoming tail, but it's also a nice reversal hammer, right? You've got a nice hammer here. Look at that. The bottoming tail is the stick of the hammer, and then look at that the green part of the candle, right? You've got a nice hammer on it. That's a really strong reversal play, right? When you see a candle form like that, this is a strong indication that the stock will rebound, right? You can see that with a lot of different stocks and a lot of different plays. And look at the play here. Let's say you saw this, you would have bought, let's just say 630 calls. You could have placed your stops right here at 625. Let's just say. Let's say entry was at 627.75. Let's say you got in, let's just round it up, 628. In this play right here, you would have risked a total of $3, and Tesla would have never stopped you out. So for a total risk of $3 on the trade, $3 per share, your gain on it, had you taken this trade, and let's say you would have bar by barred it, right? So we go long, buy 630 calls, you go long, boom, a new candle opens up, it rallies. All right, new stops, 629, room, rally, new candle opens up. All right, new stops, 632.46, boom, rallies. All right, new stops, 635, boom, rallies. New stops, 641, boom, rallies. New stops, 642. You probably would have been stopped out right around here, right? Give or take. I mean, think about that for a second. You could have risked a total of $3 per share, and you would have banked, how many points? 17 points, or 15 points. That's one hell of a trade. That's one hell of a trade. Now, by the time, so I shorted Tesla, and once I was done with my short, I started looking at some other trades. By the time I looked back at Tesla, which I always have Tesla on my far right screen, on one of my charts, I saw Tesla around the 636 level, which was like right here. So I got back into Tesla, and I saw Tesla right here, right? And so what I told everyone was this. You see this topping right here? Oops, I didn't mark that really well. You see this topping right here? The 935, the 930 candle? The top was almost 636. So I told everyone, all right, if it breaks out of the intraday high, which was 635 around there, go long. So even if you missed the real entry on the reversal, which was down here, you could have taken Tesla right here, which is where I called it for a second time, right after the short, and boom, you would have still made money on the play. So the point that I'm trying to make here is that when you're trading, you obviously want to identify the best entry point. And sometimes identifying the best entry point, you've got to know how to read the chart pattern, right? The real entry point on the reversal on Tesla on the long was down here, on that nice reversal, bottoming tail, hammer type candle, right? Boom. Your entry point would have been solid on that. Risky play, right? Because you would have had to put your stops either on the bottom of the prior 5-minute candle or at the low of day, right? Those would have been your two options for your stops. Even if you did put your stops at the low of day and risked a total of 5 points, you still would have banked, how many points were we talking already? 17 points, or let's just say maybe 15 points. So risking 5 points for a total of 15 points, that's a 3-to-1 trade. That's beautiful. That's a perfect trade. So let's say, and in my case, you missed that entry point because of whatever reason. then you've got to find out, okay, where is my second entry point? Where can I get in with conviction on the trade? One strategy that I have is always to identify the prior high on the day, and if the stock is going to break out of that high, go long, right? So this was the prior high, this was the second entry point. Boom, go long right here with stops at 633. So right there, risking 3 points, total gain is what? Between 4 to 7 points. So not bad as well on a risk reward perspective. So I'll pause there. Any questions on this Tesla analysis? Feel free to unmute your microphones, or you could text in the general chat text channel. I got a question come in. You don't have a mic today. Do you use stock or options? I do both. So I do play equity and I do play options. Depending on the stock that I'm playing, I will choose whether I'll do options or actual equity. For a stock like Tesla, a lot of volume is always traded with the options contract. So I do like playing Tesla with options. Simply because you can get a bigger size on Tesla and not have to dish out a lot of equity on it. Because for every 100 shares that you buy on Tesla, you know, at the current price that it's at right now, you need about $64,000 of capital. So, you know, if someone is trading and they don't have $64,000 of capital, you can buy one contract on Tesla. Might cost you you know, maybe $2,000, $3,000 maybe. So, and for every contract gives you the handling of the stock as if you had 100 shares. So you tell me, would you rather dish out 100 shares and use $64,000 of capital, or just buy one contract that costs you maybe $3,000 and can give you the same return? So, so I know that was a kind of a little bit of a long answer, but for me, it just depends on the stock that I'm trading. I make my decision primarily based on the liquidity of the trade. So for me, I could take 100, 200, 300, whatever shares of Tesla, but I prefer to play options with it because the liquidity on the options contracts are really good, right? Sometimes it does have a spread of about maybe 20 cents or 30 cents, but on a stock like Tesla, that's not bad. Now, there are some other stocks that, for instance, there was one that I was going to trade earlier. It was QS. Yeah. I was going to trade QS, but the spread on the options contract was about 60 cents. So if I were to bought 10 puts or 10 calls and just did a market order, I would have immediately been down $600 on the trade because the spread was about 60 cents. So, and then when I pulled up the detailed quote of the stock, the spread on the actual stock was only like 10-20 cents. So immediately I decided, nope, not touching the contracts. I'm just going to buy the actual equity. So that's how I make my decision, right, on whether to pick options or to just trade the stock. So hopefully, was that helpful? So any questions about that? About the options for stocks, or you know how I traded Tesla? Yeah, man, no problem. So, is there a stock that you guys would like for me to review? Maybe there was a trade today that you took personally that you would like for me to take a look at? So I guess out of the trades that maybe you guys took today, was there a specific trade that you made the most money on today? Was there a trade that you lost money on today? Or it doesn't even have to be today. It could have been any trade that we took this week. Okay. Yeah, tell me exactly the time you got in and everything. Was the trade today on plug? Okay. So what did you play? Calls or puts? Okay. So you bought 36 calls for plug at 9:38. So you bought it on this candle. Uh-huh. Okay. Gotcha. So the first thing I will say is so you bought it somewhere around here, right? Here's the thing. Um the plug trade actually I would have not suggested buying calls on plug during that time. And here's why. Because the stock opened up here at 9:30, ding ding ding, opened up, it popped a little bit, but immediately look at what happened. It got rejected off the 20 MA right here, right? So you have the 8 MA, you have the 13, and you have the 20 pushing downwards, right? So the trend is to the downside. Then you had on the next 5 minute candle, 9:35, an extremely strong red candle right here, right? So this is almost a perfect engulfing red candle. That is a candlestick that you do not want to buy calls or to buy long the stock, because most likely on a strong pull like that, you're going to get a continuation, and that's exactly what occurred right here. Look at the 940 candle if you're looking at my screen. So you bought calls right here, and then immediately the new candle opened up and it just whoop. So you probably got stopped out probably at like 96, right? For a 4% loss. Probably like so. Gotcha. Sure. Mm-hmm. Yeah, yeah, you were in that trade for 40 seconds. So yeah, in that case, honestly, yeah, when you see that type of setup, when you see the moving averages pushing downwards, when you see a strong red candle, pull like that, I would not buy calls. I would actually wait for some sort of basing action to occur or some sort of reversal. And actually, speaking of which, look at right here, 945. I just highlighted this area right here. Look at that reversal doji right there. You see that? These type of candle formations, guys, we have to train our eyes to recognize them. Because if we can train our eyes to recognize these types of reversal plays, because this candlestick tells you a story. So It opened up right here. It opened up at about $35. Sellers kept pulling it down. The stock went all the way down to 34.69. But then the buyers said, no, 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 no. This stock is way too cheap, way too oversold. And actually, I just said the word oversold and I didn't even look at the RSI. Look at the RSI at that time. It was at like 20. Remember, anything below 30 is oversold. So you have a hard yank. RSI gets to oversold territory. The stock creates a reversal doji right here. Holy moly, bro. You buy calls right there. Put your stops at low a day. You would have risked a total of 30 cents on the trade. And you would have banked, let's just say you took profits around here. You would have banked a whole $1.26 to $1.50 on the trade. And all you risked was 20 cents. Oh, excuse me, like 30 cents. So these are the types of plays that we need to train our eyes to identify. The RSI seems like a really good indicator. Yes, it is, man. The RSI is actually one of my favorite indicators. I use the RSI a lot. That's why I have it on all my charts. I keep a very close eye on the RSI because when you see a reversal doji like this one, I mean, you have seconds to process it, right? So, oh man, look, a reversal doji is forming. Let me take a quick look. RSI is oversold. And let me take a look at the volume. The volume is trading over 1 million shares right here. So there's a real battle. There's a real tug of war right now between the bulls and the bears. Okay. Reversal doji, oversold condition, high volume. I like this reversal. You could have taken a bet right there for the stock to reverse and whoop, made your profit. Probably been done with the day just with that trade. Now, obviously, this goes without saying. This is easier said when you're reviewing the play after it's all done and when the stock market is not live, right? So I get that. But if you start training your eyes to identifying these opportunities while it's happening, you will become an extremely profitable trader and someone who will just consistently just sit on your hands, until a nice opportunity presents itself. This is where a lot of money can be made, just like the Tesla. I mean, that reversal candle that occurred right there at 9:45, had you identified that and taken like 6:30 calls, look at how much money you could have on that trade alone. Just with one contract, you could have probably made over $1,000 just on one contract, right? So imagine if you took 5 or 10, right? So I'm telling you, these reversal plays are really, really powerful plays. And the reversal plays, when we're trading it in the live trading room, you'll hear me and Taj say like, okay, I would rather the stock pull back at the open because maybe there's some profit takers, and then when you see that pullback and then that bottoming tail bar start to form and that reversal to take out the prior red bar come into play, that's a nice reversal. We can go in for a long, put your stops at low a day, right? And even for like gap and go situations, right? When the stock is gapping up, maybe it sells off a little bit at the open and then just whoop, rips. Those are the types of plays that can make you some serious money. Those are my favorite plays, actually. Favorite plays, because you can read them from a mile away. So does anybody have any questions on kind of like the reversal play? I know that's kind of the theme that I've been sticking with today, at least with the plug-in Tesla. Were there any other stocks that you guys traded today that you want me to take a look at? If not, we could take a look at Facebook. Facebook was one that I traded today as well. Made some good money on it. So one trade that I took with Facebook. Let me see. At what time did I take Facebook? I took Facebook at, let's see here, 12:33. So 12:33. When did I take it? Oh, I see when I took it. Right here. So let me just zoom in. Okay, perfect. So with Facebook, it kind of, at the opening, it didn't look very attractive in the sense of like there being a nice opportunity to get in it, because it created like these Christmas lights, as we like to call them, right? These Christmas lights at the first like 20-30 minutes. But then it started to grind a little bit higher, popped, sold off, and then started to reverse, right? Created a new high, sold off and consolidated. And Facebook was brought to my attention right here, right? At about 12:30. So I told myself, okay, so if Facebook breaks above 270.37, I'll go long, and I specifically bought 272.50 calls for next Friday expiration. I bought it right here. I bought it at 12:33, 12:32, right? And immediately the stock just ripped, right? It ripped to about 271, and I sold it. Let me see here. I held the trade for about less than 2 minutes. So in less than 2 minutes, that stock delivered, let me see, how much did it deliver? In percentage, let me just calculate percentage wise. 382 and 360 and 3.66. Okay. That right there was a very quick 5% gain. Right there. So, of course, 5% gain is nothing extremely lucrative. But if you take 10, 20 contracts on a 5% gain, hey, you make a couple $100, right? Right there on that move. And for me, sometimes a quick move like that isn't exactly the base hit that I'm looking for, right? You guys will hear me often in the trading room, like, look, I'm just looking for a quick base hit. And for me, a quick base hit is it's a couple $100, right? So it could be $200, $300, $400, right? So that's a base hit for me. So this setup, this push that Facebook did is exactly the type of setup that I look for when I want to take a quick scalp of the bigger move that's occurring, right? Because you could tell me, hey Alex, why didn't you buy Facebook all the way down here? Well, because I didn't want to have to go through all of this wave, right? All of the ups and downs, right? I am a momentum player. So I like to play momentum where you got a strong, look at that. That's a textbook engulfing green candle right there. So I identified that entry point, right? 270.37, because I wanted to confirm that, okay, it's going to break out of the prior high. And I took that bet, scored a quick base hit, done. Move on to the next trade, right? And look exactly what happened right after. It created a new high, and then whoop, came right back down below my entry point. So that just goes to show you as well why I'm a momentum player and why I take my profits really quick, right? So does anybody have any questions on this type of trading? Because this is a style of trade that I do very, very frequently. And I use the word style because that's exactly what it is, right? It's a style of trading. Not everyone trades that way. Some people are a little bit more patient with their trades. They give the stock more room. They want to capture the bigger move, and that's completely okay. But for someone like me and the style of trading and what I look for, I'd rather take momentum trades like this with big size, cash out, move on to the next trade, right? So there's a lot of different ways to trade. A lot of different ways. And no specific style is wrong or right. But you've got to ask yourself, what style do you want to implement for yourself, right? What type of trader do you want to be, right? And that's something that comes with time, but it is an important question. It took me, hey Alex, did you say you got stopped out, or how did you get out of it? Nope, I didn't get stopped out. I took profits. So when I hit about 5%, I took my profits on that. Because with me, so let's see here. So I can give you guys specifics, right? I bought my contracts for $3.66. I sold my contracts at $3.82. I didn't have stops. I simply, honestly, Marty, I simply looked at my P&L. I saw a 5% gain. I was looking at the chart. I said, you know what? I'm completely okay with this. And I took my fast money. That is a scalp. That's called you're scalping the stock, right? You're just taking a little bit here and there, right? You're not holding it for a bigger move. You're just taking little quick money that it delivers to you, right? Because of that strong push that occurred, like what happened right here. So if I were to reduce it on a 1 minute time frame, let's see what exactly occurred at that time. So, all right, I trade on the 5 minute, but I'm just curious to take a closer look, right? Okay. So I got in right here at 9:32. So I got in right here with the bet that it would break this high. Boom. Within a minute, it did. It ripped. And let's see the time that I clocked out of the trade. 12:34. I clocked out right here. Wow. And this is the 1 minute candle, which I don't trade off of. I clocked out on that candlestick right there. So I literally lasted 1, 2, 3 minutes in the trade. The next minute, it popped a little bit more, but then sold off. And then the minute after that, dipped right back down. So even if I did have stops, let's say I had stops and I was trading on the 1 minute, I would have placed my stops on the bottom of this candlestick right here. So I would have placed my stops at 270.91 or 270.92, right? If I did do like a bar by bar strategy on the 1 minute candlestick. However, if I pull up the 5 minute, you'll see I wouldn't have been able to identify that 270.91 area, right? Because you can't clearly see that here. So to answer your question, no, I didn't have stops. I just simply took my profits when I saw them. But I pulled up the 1 minute because I was just curious to see, how it played out on the 1 minute. Yeah. So hopefully that was helpful. Okay. Anybody have any other questions on this Facebook trade? So this is obviously what you call a scalp. Oh, you're welcome. I think I saw a question here from Anthony. What do you think of the energy stocks? They've been on a roll. Yeah, man. I mean, one thing that Taj and I always tell just everybody in the trading room is, let's not, when you're day trading, you want to follow where the herd is. And what I mean by that is you want to find in your pre-market research where all the other day traders in the world, where they're trading at, where are their eyes on, and what are they focused on, right? Because if you trade a stock like, I don't know, let me see, a stock that barely moves, like Siri, for instance. Look at this. This is ridiculous. So your total range on this stock, the low is 625, the high is 631. You can't day trade this. Why the hell would anybody day trade Siri, right? You have a total of 6 cent range. You can't, as a day trader, you don't want that. You want to day trade a stock like Tesla, like Facebook, where there's significant volume and there's significant range, like Myrna, for instance. These are the stocks that you want to play, right, when you're day trading. So the energy sector, and these clean energy stocks like Plug, FCEL, these have been the hot names. Every freaking day trader in the world is on these names, and even the EV names like NIO. NIO is an awesome stock to day trade. Look at this reversal on NIO. You see this on the 930? It's sold off. And then look at that immense reversal. I mean, it wiped out the entire sell-off. These are names that, man, if you can nail these stocks, you can make serious bank. I mean, look at the low of 445, like 46, the high of 48, that $2 range right there. You can make a lot of money. A lot of money. So, yeah, man. I mean, as long as, to be honest, I don't care what sector is hot. I don't care what stocks are moving. As long as there are a number of stocks that are being heavily traded, that's what we care about, right? So, as long as they're still hot, we keep trading them every single day. So, some other names I know that are being heavily traded right now, like Plug, I think, well, Fubo, I always mispronounce that one. Fubo is another big one that's being heavily day traded. I mean, we day traded this one back when it was in, let me see, it was like 5 days ago, 6 days ago. Yeah, right here. We were trading this sucker from down here. And this thing never turned back around. Did a 100% gain from 5 days ago. Insane. So yeah, this is where our attention is, and this is where, this is exactly why I do all the research that I do in the morning and in pre-market, so that I can make sure that, we've got the hottest names that are being traded, and we don't miss a beat, right? And look, there are thousands of stocks that are traded in the stock market. And as a human, I mean, man, your attention can only be on a certain amount. So for me personally, I can watch 6 different stocks at the same time, based on my setup that I have here. On each of my charts, I have 10 tabs, so that means I can kind of keep an eye on 60 different stocks that I can flip throughout the day. But I can really just pay attention to 6 at a time, right? So there's going to be a lot of stocks that are going to fly under our noses that we're not, that we just didn't have our eyes on, or maybe we weren't aware of. But there are going to be plenty of times when that happens. But as long as we are focused on the ones that we are paying attention to, and we identify those key reversal plays or the key breakouts, or the key breakdowns, for short opportunities, then we'll be fine in general as day traders and also as a community. So I know that was a super long answer for for your question, Anthony. BE and SBE. Let's see. Not familiar with those tickers. BE. Yeah. I don't think I've seen this one. Let me see. Pull up a longer term. Okay. This is a 1-year chart. So, alright, you got something interesting for me here. So it looks like it wants to break out of all-time highs. So it's about less than $1 away from breaking out of all-time highs here. Let me Let me go a little further out. Oh no, this is not all-time highs. This is, but it's pretty close though. 2018. All right, look at that. Look at that complete reversal on it. Damn, this almost became a damn near penny stock. Interesting. Interesting. Yeah. No, thanks for bringing it to my attention. We'll kind of keep it on the radar. Yeah, good stuff. Okay. And then SBE. Let me take a look at SBE. All right, this one had a nice pop today. Look at that. Was trading at about 42, 43, rallied to 48 and change. Pretty nice. Yeah, man, these energy stocks are going wild. Absolutely wild. Look at this one. Was this a SPAC? This one recently IPO'd, huh? Or went publicly traded through a SPAC, it looks like. Wow. All right, man. I'll keep this one on my radar too. Good stuff, man. Thank you. So do you guys have any other questions? Did you guys find this helpful? Did you learn something new? Just kind of want to get a temperature check here to see maybe if there's anything else I can address. I want to make sure you guys, walk away with something new from here. Or if there wasn't something new, at least something that reinforces, right? Like what we're doing every single day. Yeah, man. Awesome, brother. Well, thanks for the feedback. Glad you found it helpful, and Madi, you found it helpful as well. So awesome, awesome. Well, guys, if you guys don't have any other questions, I guess we can wrap it up here because we do allocate about an hour, and I see we're approaching that hour. But I'll throw the question one last time in case there's another stock you want me to review because, I want to make sure I give you the full hour. I don't want to cut you guys short. Hey, what's up, Daniel? Good, man. How was your day today? Was it good? Yeah. Awesome, bro. Yeah. Oh yeah, yeah. Did you take the short on the S&P with me, or did you take that Facebook? QS? Mm-hmm. Mm. Oh, good, dude. Nice. So you played the pop on the QS for once it reversed. Excellent, man. Excellent. Yeah, and look at that on the QS. So I was looking at the QS at about 320, 325 when it sold off. Look at the RSI. It got into way oversold territory, almost below 20. And then what happened immediately? 5 minutes later, at the 230, whoop, reversed, popped straight back up. So good stuff, man. Glad you took that play in the afternoon and made some quick profit. Good, good. Yeah. I appreciate that, man. For me, I want to say about 70% of the trades that I call out are profitable because it's impossible Man, there's no one out there, man, that makes calls, takes a trade and makes 100% of the times makes profit. I mean, one, yeah, I have yet to meet that type of person, and two, I mean, you just no one has the crystal ball, right? No, there's no crystal ball, and at the end of the day, as long as the winners are bigger than the losers, and the losing trades, we manage them appropriately. We don't let them bleed us out. Um, we'll consistently be profitable. We'll consistently be, in the game and living off of the stock market. Um, but I'm glad you had a good day, man. Good stuff. Yeah, man. Well, with that being said, guys, I mean, we did review a couple of good trades, a couple of good different strategies. We did go over, we spent a lot of time talking about reversal plays, which is a very, very strong, very powerful trade that we always take. Breakouts of highs, scalping, and we talked about shorting the S&P 500 earlier this afternoon. So hopefully you guys all found this valuable. It is Christmas Eve tomorrow, so for those of you who celebrate Noche Buena, I hope you have a great dinner. And for if I don't see any of you, and for everyone watching on YouTube, Merry Christmas, Happy Holidays. The next trading review, let me pull up the calendar really quick. Okay, we most likely won't have another trading review until January because next week, I know Taj and I are both going to be on vacation. So most likely, probably like 99% certain, we're not going to have a trading review next week. So most likely the next trading review will be on January 7th. Okay. So just wanted to give that little bit of information there. But once again, guys, thanks for tuning in. We'll see you guys tomorrow in the trading room. Take care, guys. Have a good night.